Alright guys, so things are wrapping up again as if the trade war isn't painful enough. And no, the chip war clearly isn't risky enough for Trump. He wants more excitement. Now he wants to target China's banking sector. And talk about playing with fire. We are back to the good old financial sanctions playbook. And can we stop pouring fuel on this house of fire before we burn down the entire architecture? Now, a month ago, the White House confirmed they were going to contain Iran's economy by oil sanctions, and this revolved around secondary tariffs. Any country that buys oil from Iran will not be allowed to do any business with the US. Now, there might be a tariff war or outright sanctions to ban exports to the US consumer market. Now, that is bad enough, and we kind of know who Trump is really trying to target. It's China. Beijing imports more than 90% of Iran's oil exports. Now, while it's true that China can get supply from Russia and Saudi Arabia, Iranian oil is simply too attractive. Besides, China's supply from Iran is also tied to an investment deal signed in 2021. And under the Iran-China partnership, Beijing would invest a ton of money into Iran's economy. In exchange, they would get a steady supply of discounted crude oil. According to the details, China will enjoy a guaranteed discount of 12% versus the market price. There will also be an additional 6 to 8% discount for taking the risk with Iran. It's a win-win deal, especially when Iran is under heavy US sanctions. In addition to that, payment for the oil will be done in the Chinese currency, the RMB. So it's an additional layer of de-dollarization for China's trade flows. So you can see why Trump would love to contain Iran's oil exports. It's a hit on China's economy as well. There's no love lost. Raise Chinese energy prices to make their industries more expensive and uncompetitive. But we are now entering dangerous territory. Trump is willing to break apart Chinese banks to make it happen, and even Janet Yellen didn't dare to cross the line. According to reports, a delegation from the US Treasury met with Hong Kong banks in April to issue them a warning. Do not facilitate oil shipments from Iran to China. And these are big brand names that have an international presence. So if they were targeted with US sanctions, their business model could very well crumble. Getting cut away from the dollar system is unthinkable. Trump is talking with Iran to get them to drop their nuclear ambitions. In return, he might just lift US economic sanctions. Now, will this happen or not? We have no idea. But this threat to Hong Kong banks is very real and is happening right now. Banks are almost always needed in the oil trade. They provide the financing, they provide the insurance, and any hedging necessary for buyers. Without banks, moving oil cargoes on your own is going to be very risky. It's quite impossible. Now, the banks were asked to play detective and look through the front companies to uncover the ultimate owners and flag suspicious transactions conducted in non-dollar currencies. The US is basically asking the banks to do their own dirty work for them, to help enforce US sanctions, to give the US Treasury a list of companies that are importing Iranian oil. Now, over the last week, we talked about how Hong Kong is rising fast to challenge Wall Street. Now, they are home to some of the world's biggest IPOs like the upcoming CATL listing, and that will be the biggest in 2025. It's no coincidence that US lawmakers actually accuse Hong Kong of becoming a global leader for financial crime. And this is a very dangerous step, but here we are. According to the committee, they believe Hong Kong is involved in the buying of banned Iranian oil. They have also somehow helped in the gold trade with Russia. But it does show how fast things are starting to unravel between the US and China. The decoupling between Wall Street and Hong Kong is going to happen sooner or later. Even today, Trump still believes that China is ripping the US off in trade. He repeated the same speech in Doha, and if that's the case, everything is seriously on the table now.
It's just pay off debt. We're making a lot of money. We had a situation 6 months ago. We were losing $5 billion a day on trade. Now we're making money on trade. Don't forget, we were losing $1 trillion to China, so we essentially went cold turkey with China for a period of a month. Therefore, we weren't losing $1 trillion. I think that's pretty simple, Scott, right? Scott did a great job over there. They made a deal. They have great relationships with China.
And if you're China, you realize you need to de-dollarize faster than ever before. Relying on SWIFT is impossible, and the less dependent you are on dollar transactions, the better. Now, Beijing's cross-border trade using the RMB is growing year on year. Just in March alone, this number hit $725 billion worth, and 54% of which are done in the local currency. Only 41% were done in dollars. America's trade war is just going to accelerate this. If you're Trump, to protect the dollar system, you want to have free trade with China. Even the 30% tariffs today is only going to encourage the Chinese to head elsewhere. There's speculation that China tariffs won't last until late 2025, and if that's the case, imagine the amount of trade drop off that will happen. China trading less with the US will mean fewer dollar transactions. Chinese exporters will be more than happy to invoice or pay in the RMB. They will bear no currency risk as well. So there's a big disconnect in the Trump administration. Free trade is actually a very powerful mechanism for the US to protect the dollar system. You unravel that, you hurt the USD as well. However, can things get any worse? Well, it potentially can. Remember the Trump agenda, reshore industries and build up America's manufacturing base. Well, that plan might go down the toilet if Trump's new bill is passed. And yes, it's really called the One Big Beautiful Bill. And even Bassett is trying very hard to sell it to Congress.
Are you familiar with what President Trump has called his One Big Beautiful Bill?
Yes, sir.
Could you describe the basics of that bill?
It is a combination. The core of that bill is to make the 2017 Tax Cuts and Jobs Act permanent.
If this, what he quotes, a big, beautiful bill passes, will the deficit go up or will the deficit go down?
I believe over time, the deficit to GDP, which is the important number, agrees with that, will stabilize and go down.
Well, that obviously didn't work because the bill is now in limbo. It was voted against 21 to 16. The bill not only threatens to increase the deficit, in certain income groups, taxes will fly up. But there's another provision in the bill that's just as concerning. It threatens to torpedo Trump's very own reshoring plan while angering foreign companies. Now, the bill will allow the US to retaliate against unfair foreign taxes. This is such a vague provision. Interpretation can be extremely broad, but it does give Trump the power to increase taxes on foreign companies and individuals whose countries impose discriminatory taxes on American businesses. Now you can see how crazy this can get. Firstly, how high is too high? And are companies in the US going to face a two-tier tax system depending on your home country? Now, this directly contradicts Trump's end goal of encouraging companies to reshore to the United States. The punishments here are very brutal and just discourages foreign companies even further, as if high labor costs and expensive inputs aren't already an issue. Now, the tax rate on US income of foreign companies could increase by 5 percentage points. That's a lot of money lost to the government, especially if your revenue is in the millions or billions. Certain payments made abroad could also increase from 10 to 12.5%. And this sounds like capital controls to me, to keep the money in the US. And how does this make the US economy attractive? It really doesn't. And let's say you own a factory in China or Japan. Do you dare move production to the US? Now you have no idea if Trump would U-turn on the reciprocal tariffs. You have also no idea if things will reverse after the midterms. And now we have this new crazy provision that could make things worse. And we have to get real here. It's not like the US consumer today is the shining paragon of spending. US consumer sentiment has fallen to the second lowest level on record. The 12-month inflation expectations have also climbed to the highest level since 1981. The premise of reshoring was simple. The US consumer spends more than anyone else in the world. Now that was the story that Trump is selling everyone. Build a factory here and you'll make a nice ROI faster and churn out a very great profit. But now the consumer is facing a collapse. The effects of the tariffs are starting to pile up, and all the front loading in March and April, they are starting to mess with people's heads. Not even Trump's truce with China is making things better. There's still immense fear, and that's why sentiment is crashing. Even the 5 to 10 year inflation expectations are nearly doubling just a few years ago, hitting 4.6%. Just this alone is going to complicate things for a bunch of companies. If consumer demand in the US is going to be weak, that's my only source of income. I won't be able to export elsewhere. Either way, as a company in the US, you will be affected by this. People will buy less, or you have to absorb some of the tariffs from your higher input costs. So it's just one big disaster you can't avoid. This one chart shows us why reshoring to the US is a big gamble. Retailers and wholesalers saw their margins contract by a record 1.6% in April. In other words, they are making less because they are eating the additional costs. It's not just in April. Since the start of 2023, US retail profits have been dropping almost every other month. This shouldn't be the case, especially when inflation is persistently high. You need profits to keep pace with inflation because salaries are definitely rising, input costs are also not dropping. If you import steel, for example, you are now facing a 25% increase in your raw material costs, but the consumer is just too weak for you to pass on by jacking the price higher. And that's why Trump's reshoring plan could crash and burn. There are just too many uncertainties. It used to be just trade policies and a tariff war, but you throw in this foreign income risk. Which company wants to build stuff in the US today? Existing US companies are already facing a world of hurt. Now, these are existing businesses that are already operating in the country and even they can't survive. Year to date, 246 large US companies have gone bankrupt, the most in 15 years. That's double the amount in 2022 in the same period. April alone saw 59 bankruptcy filings, and guess which sector saw the most collapses? To no one's surprise, it is the industrials, heavy manufacturing. So, what are the odds of Toyota or more car companies shifting production to the US if this chaos continues? They can see the train wreck. The odds will be slim to none, and Slim just left the building. Trump's biggest problem is not the tariff per se, it's the uncertainty and the constant waffling around. It's 10% today, and then 30% tomorrow, and next week it could be off, but a month later it could be 100%. No company in the world can operate in such an environment. Furthermore, the dollar is in terrible shape. It's falling against major currencies. Now, Trump wants Japan to reshore production to the US, but the dollar has fallen by 8.1% against the yen. And let's flip this around. It means a foreign company will face a profit collapse when converting their earnings back to their local currency. They need to squeeze an additional 8.1% from the consumer, but good luck asking US buyers to foot the bill. It's problems on top of additional problems. Not many companies would dare to move to the US unless there's really some compelling reason, which there really isn't. You have a collapsing consumer class, regulation risk, income risk, and even currency risk. We really salute any company willing to take the gamble because it is a gamble. But let me know what you think. Will Trump really cancel Hong Kong banks over Iranian oil? And will his reshoring plan work despite all the economic risks? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.